All right, bull runners, welcome back to the channel. So with XRP sitting at 49 cents right now with a $26 billion market cap, the main question is, will XRP see a ballistic rally with adoption by banks over in Indonesia, Philippines, Vietnam, and also Ripple's money tap payment system over in Japan? So we have a lot to talk about with you guys in this video. We have to talk about what's happening on the chart right now, what to expect over the next few weeks and few months. We're going to look at the Dow can barely talk today, the Dow Jones Industrial Average. We have to look at the S&P 500. We also have to look at the September effect in the stock market versus the October effect on what's most likely to happen this month. And also, are we officially in a silent depression compared to the 1930s? We're going to discuss all of that in this video, along with inflation, how to beat inflation, what to expect, and also what we're doing right now as we back up the truck and prepare for the coming altcoin reckoning in comparison to Bitcoin. So comment 777 if you're feeling blessed, if you're feeling bullish, and if you're going to become the first millionaire in your family tree, you know what to do. Confirm it by tapping that subscribe button. Let's run it. All right, so looking at the XRP to the US dollar price chart, with XRP sitting at 49 cents, this is a critical support zone right here. If we see XRP break to the downside, we would more than likely see XRP fall anywhere between 41 cents and 44 cents within this zone right here. And it also coincides with this upward trending support line right here that XRP has held since the 16th of June. You guys can see multiple points of contact right here that it's rebounded off of. And so this is a very strong zone of support. Now, one thing that's interesting to note is from January of this year, XRP has been bullish. Well, XRP has been bullish since June of 2022. But a key thing here is the support, this upward trending support has been even steeper. You can see right here from the 13th of May. You can see right here from the 1st of July. You can also see right here when the decision came out between the SEC versus Ripple, we saw XRP break up and almost pass $1. But then we saw it come back down to retest this upward trending support, and right alongside it from 17th of August, it wicked down below it, but it closed above it all the way until recently. And so when we zoom in here and I show you guys what I'm looking at right here, we broke below it just recently. And so we broke below it on the 31st of August, which means that the favor is in the bears, right? So because we've closed below it since the 31st of August, so for about 10 days, we've been below this upward trending support line right here, the favor is to the downside. Now, does that mean you should get out of XRP? Does that mean you should sell now or get out now? Absolutely not. Again, this is not financial advice. Don't sell your XRP. Don't buy XRP. Just watch this video for learning purposes only. But the favor is in the bears right now. So where this upward trending support line is back from 2022 would be the most likely intersection right here. Now, this would come at the backs of Bitcoin seeing a sell-off, the stock market seeing a sell-off. It's not going to happen instantly. We could see something like this take place and then ultimately a shakeout event right here, and then the elite coming in, buying up XRP, and us springing out of here going into 2024 after some crazy catastrophic event like an EMP attack, fake alien invasion, 3 days of darkness, something happened with the economy. I'm not going to get into conspiracy theory land, but the elite of the world are planning something just like they did with that closed down the world. So we just had to be ready for something. I would expect something like this to take place for XRP. Now, hey, if it doesn't, and this is a fake out, and we work our way up to 59 cents, consolidate, and then retest the previous high, and then break out of here, and we just keep trending higher, then that would be awesome. But the charts don't lie. So when we see this upward trending support, the fact that it broke to the downside, I'm leaning more bearish right now, but I'm bullish long term. As you guys know, I do hold XRP. It's one of my largest holdings of altcoins, and so I believe in this project and the company. So, but I'm also not naive, and I don't think it's just going to go up forever, because that's not how these markets work. I'm a macro investor. So when I look at the Dow Jones Industrial Average, one thing that we're looking at right here, this chart pattern on the macro, is a rising wedge. So in a rising wedge pattern, what we see higher highs and higher lows, but it wedges together, and eventually something's got to give. Now, something has to give to the upside or the downside, but in a rising wedge, as we push to the upper portion of this wedge, eventually we see a break to the downside is most likely. Now, the real question is whether we retest the wedge and continue to the downside, or if it's a fake out and we just trade higher, outside of this wedge. But in a rising wedge, a breakout confirmed on the close below support, and we could see a retest of the former support acting as the new resistance and then a rejection from that. That's what I would be looking for to see, an altcoin reckoning for the altcoins to get absolutely destroyed with the stock market, then rebound out of the dip. The dip gets bought up, and then we go into the bull run of 2024 leading to 2025. Now, the real question though is, if we were to see a break to the downside and a back test and continuation, how low would we go for the stock market? How low could we potentially go for XRP? And how long will it take before we rebound out of here? Because it's very clear that XRP is the strongest altcoin out of the entire industry because it has the most regulatory clarity based on the lawsuit. The only thing that's holding it back is really what they're going to announce in New York this month, or if they're going to settle with the SEC, and then ultimately what happens with macro market conditions and the liquidity that I talked about yesterday. So one thing we're looking at the S&P 500 as well too. We see this bullish channel, and ultimately, if we zoom out right here, we can look at the 4-year moving average, the simple moving average that you guys can see in yellow. Now, during the last pandemic in March of 2020, we saw a V bottom right here in recovery down to it. The last time that it was at it before that was all the way back in 2000. I believe it was in 2008 right here during the subprime mortgage crash. We dipped well below it. So we came down to it, we bounced off of it, and then consolidated for a little bit and dropped well below it. So could we see something like that with another pandemic? Hey, it's possible. I talked about this before when everyone was expecting something like that to happen right here at this point. Everyone was expecting something like this to take place, but it was the exact opposite of what happened. So, a lot of people are expecting something like this to take place, for it to push a little bit higher and then break to the downside, and for us to see a correction down to it, maybe late 2023, early 2024. So we'll see eventually at some point the stock market will correct, because we've been bullish since October of 2022. So can't keep going up forever. There'll be another correction. And obviously the question is, how deep will that correction be? So if I were to draw the Fibonacci retracement from the low of October of 2022 to the current high, and we were to look at this, if we were to see just a 0.283 correction, that would be a 9% drop in the S&P. If we were to see a 50% correction, that would be about a 12% drop. If we were to see all the way to 786, that would be an 18% drop. And what's interesting is the 4-year moving average, as it trends upward, that would coincide right with a 786, give or take a few percentage points right here. And so could we see, as the stock market pushes higher, a break to the downside coming all the way down here for some crazy flash crash event? And then in 2024, we work our way out of here as we see the next bull run for the cryptocurrency market as well too, and this bleed into Bitcoin and the altcoins. Well, it's anyone's guess, obviously, to say that will happen. Could not happen. They could usher in stimulus and more QE, quantitative easing, before the crash gets too deep, and then they have to pivot on their balance sheet. The Fed has to push more money into the system. But ultimately, if we look right here at the September effect, right, so a lot of people watch my videos, and when they see I make a bearish video, they all of a sudden get really salty about it. But when I look at this, I get excited, because bearish mentality breeds excitement, right? I look at what could go wrong in these markets right here, and also how can I be ready for that to be able to accumulate the dip. And so I don't base my opinions off of a theory. I look at facts, and one of the facts is what's called the September effect. In fact, September has been the worst performing month on average going back nearly a century. So you can't ignore that. So let's understand what it means. Well, from 1928 through 2021, the S&P 500 index has averaged a decline during the month of September. This is, however, an average observed over nearly a century. And September is certainly not the worst month of the stock market trading every year. In fact, some Septembers and some years have been among the best performing months. But overall, on average, over time, it's been negative. So we need to look at averages, right? When you do an average, well, then you can base your investing decision off of that. It's all math, right? It's not opinions here. So the October effect versus the September effect. Like the October effect before it, the September effect is a market anomaly rather than an event with a causal relationship. It suggests that the month of October 2 is a negative month for the stock market. However, October's 100-year history is in fact net positive, though, despite being the month of the 1907 panic, Black Tuesday, Thursday, and Monday in 1929, and Black Monday in 1987. But September has seen an equal amount of disruption. It was the month when the original Black Friday occurred in 1869, and two subsequential single-day dips occurred in the Dow Jones Industrial Average in 2001 after 9/11, and in 2008 as the subprime crisis ramped up. Like the September effect, the presence of the October effect will depend on the time period under consideration. Economists and analysis also discount the true presence of the October effect, and if it did once exist, seems to have also disappeared. And so when we look right here, a lot of people will question, okay, well, if we're going into September and going into October, historically, it's been over since the past almost 100 years, it's been historically underperforming. What would cause that? Well, it would be based on where we're at right now in terms of the economy, the living situation, consumer spending, what the Federal Reserve is doing. But listen to this.
We are in a silent depression. When you compare the Great Depression to today, this is going to absolutely blow your mind. In 1930, during the Great Depression, the average home in America was $3,900. The average car was $600, and the average monthly rent was $18 or $216 a year, and the average salary was $1,300 for the year. Fast forward to today, it is $436,000 for the average home, $48,000 for the average car, and the average rent is $2,000 a month or $24,000 a year. And we have a $56,000 income for the average American right now. So if you look back to the Great Depression, the house was only 3 times the average salary. Now it is 8 times the average salary. The car was 46% of the salary. The car today is 85% of the salary. And here's the craziest part. The rent was 16% of the average salary. It is now 42% of the average salary.
So the main macro analysis we need to look at is where we are in terms of cost of living and what $1 in 1930 is worth today. It's worth about $18.30 today, which is an increase of $17.30 over 93 years. If you invested $1, right? The dollar had an average inflation rate of $3.18% per year between 1930 and today, producing a cumulative price increase of 1,730%. That means that today's prices are 18.3 times as high as average prices since 1930. Now I'm going to explain what this means and also what to do. According to the Bureau of Labor Statistics Consumer Price Index, a dollar today only buys 5.4% of what it could buy back then. That's insane. The inflation rate in 1930 was negative 2.34%. The current inflation rate compared to last year is now 3.18%. If this number holds, $1 today will be the equivalent buying power of $1.03 next year. Meaning, if you had $100,000 in your bank account, you'd have about $97,000 in spending power. So you lost $3,000 in spending power. For example, if you started with $1, you would need to end with $18.30 in order to adjust for inflation from, 1930. And so it might look like it's going up when in reality, spending power is going down. So when I say that $1 is equivalent to $18.30, that means that the real value of a single US dollar decreases over time. So in other words, a dollar will pay for less and less eggs, less and less milk, less and less protein powder at the store. So this effect explains how inflation erodes the value of the dollar over time. By calculating the value in 1930 dollars, the chart below shows how $1 is worth less over 93 years, right? So it's worth around $1. And now what's it worth? 0.06, 0.05 cents. Now, here's a major key here for people think that they're making money investing in the stock market. Because the average inflation rate of 3%, having a difference of 1,730% inflation over 93 years, to put it into perspective for you, if you invested $1 in the S&P 500 index in 1930, your investment would nominally be worth around $6,151 in 2023. Now, this is a return of 615,000%, which seems pretty good, right? With an absolute return of $6,150 on top of your original $1. Seems insane, right? Imagine if grandpa passed down, a stock portfolio in his will, of the S&P 500 from $1. Instead of buying the Willy Wonka golden ticket to go to the chocolate factory, he put it into the S&P. So these numbers are not inflation adjusted, so they are considered nominal. So in order to calculate the real return on Grandpa's investment, the compounding effect of inflation would account for 94.54% of the returns, so $5,815. Now, during this period, this means that inflation adjusted real return of Grandpa's $1 investment is $335. So you may also want to account for capital gains tax, which would take your real return down to $285 for most people. Now, don't get me wrong, that's still a good gain, but we're talking from 1930 to 2023. The chances are you're born back then at that time, slim to none. Most people were born in the 60s, 70s, and 80s. So the reason why the cryptocurrency industry, with Bitcoin and then all of the altcoins are poised to do amazing things over the next decade is because people are putting their money into it to beat inflation. And so even if we see an altcoin reckoning, we see the floor fall out for the altcoins to go into a depression stage, and then we work our way out of here for the disbelief rally going into 2024, 2025 in comparison to Bitcoin, meaning that the crypto total market cap, excluding Bitcoin and Ethereum with all altcoins, that just means that it would underperform in comparison to Bitcoin. So if somebody would be holding crypto, the safest place to hold in crypto during a bear market would be Bitcoin. So if Bitcoin were to see a sell-off and the altcoins were to see a sell-off, well, during a bear market, Bitcoin is a safer place to hold your income. Now, the real question is, if we see a sell-off for Bitcoin to the downside before breaking out of here, well, will we go back down to the low of 2022? Will we stop short of that? Will we dip even lower? Could we see a $10,000 to $15,000 Bitcoin? If we were to see, my question for you is this: if we were to see a $10,000 to $15,000 Bitcoin, what would you do? Would you back up the truck, or would you get out of your portfolio? Would you be selling? I think here's one thing to note about the markets, and especially which projects are going to be the most bullish after a dip were to take place. So SBI Remit will send money transfers requests from customers, and will send XRP in response to those requests in real time. Now, SBI is a massive company. They're partners with Trangolo, another Ripple partner, to enable customers to receive remittances in the local legal tender. And so Japan has a long history with XRP and Ripple. In April of this year, Japanese banks Yumaguchi, Momiji, and Kita Kyushu adopted MoneyTap. The peer-to-peer lending app uses RippleNet and was launched jointly by Ripple and SBI Holdings in 2018. Now, the reason why this is a big deal is SBI CEO said in 2021, Japan was the most likely country for Ripple to move if the company was forced to leave the United States. So if regulation, continues to increase in the United States and gets more unfavorable for crypto, well, then Ripple would most likely relocate. Could they go to Japan? Could they go to UAE? Where would they go? Either way, Japan wants Ripple's technology. And David Schwartz, who's the CTO at Ripple, when he was asked, considering that the banks don't use XRP for their transactions, how can the XRP price go even higher if the banks adopt the Ripple platform, but if they don't use XRP? Well, Ripple's business is providing processing software to banks. It can work without XRP and without any blockchain tech. It improves international payments because it uses end-to-end messaging to track payment progress, ensuring all necessary compliance information is in the transaction in the first place, precisely knowing the fees ahead of time and providing prompt, reliable confirmation of delivery. This is a big enough improvement that banks will use it even if the actual money moves the same way it does now. Now, Ripple has built a public blockchain with the native asset XRP, has various features: a disruptive exchange, good governance, fast transactions, high transaction volume, native multisig, key rotation, payment channels, and so on. Now, you don't need to understand what all that means. We just need to know, will these banks use XRP? So let's see what he has to say. The hard part about getting banks to use a blockchain isn't the blockchain. It's everything else. It's governance, compliance, integration with banking systems, and so on. Now, the key word here to remember is what it takes for that to happen is time. Our software does all that stuff. So if routing a payment through XRP is a penny cheaper, the banks can take it. then we have to make XRP cheaper somewhere that matters, and it takes the time for them to overhaul the old system to be able to usher in this one. So Ripple likely won't target the biggest corridors like the US dollar to the euro early on because they're already efficient, or somewhat efficient, not the most efficient obviously, but early targets will be inefficient, but fairly high volume corridors. For example, the euro to the INR, the market makers, the currency traders often have very small profit margins. So even a small incentive to place good, euro to XRP, then XRP to the INR offers can beat what banks are getting now through the correspondent banking system. Once they get one corridor, we hang other countries off each other. We hang other countries off each other of the corridor, expanding the reach of XRP. Now, say you're a company like Apple with a fat stack of cash. If you want to snag up other assets for cheap, you'll need to hold the asset the people are selling want. If they're going into any of their corridors, they'll want XRP, so you would want to hold it too. If Ripple is successful at getting XRP used as a vehicle asset in international payments, new corporations like Uber or Airbnb who make payments all over the globe and want to make them as quickly and cheaply as possible could significantly add to the demand for XRP. So not just banks, but big companies like Uber and Airbnb and other massive companies that are global chains. So they can buy XRP at below market cost. Say they want to buy with the US dollar, they just wait for someone to make a payment that's bridged with XRP that delivers the US dollar. They can provide the US dollar for delivery and take the XRP from the other side of the payment. Since they're providing someone else liquidity, they'll pay below market rates. They can make payments funded from XRP at roughly half the cost. So they want to pay into a corridor that's bridged by XRP. Since they already have XRP, they can save the cost of the 2 XRP half of the payment. This means they'll save money by holding piles of XRP sufficient to adapt the timing of these two operations, and they'll be adding to XRP demand. These forces could be expected to increase the price of XRP, although there's no guarantees. This same logic can apply to all kinds of companies that make payments around the world. At least that's what Ripple is betting on. That's what they're working on. And so far, Ripple's delivered on a lot of their claims on what they've strived to do, and they just continue to make these massive partnerships. After all, the reason they're doing this is obviously to increase the demand for XRP, to increase the value of what they hold, that they can extract from and use to further the development of Ripple. So if Ripple's goal, if they want XRP to grow in value, they would need this to take place. So you best believe they're working on that negotiation behind closed doors. And so the Ripple CTO acknowledged that there's no guarantee central banks will use the bridge. However, he maintained that the company's approach was to remove technical barriers and allow users to use XRP if they choose to, rather than forcing the matter, which would slow down adoption. That said, he says, I never recommend building products that require people to use XRP unless they're the XRP ledger features, because that becomes a reason not to use the product. And Ripple's CBDC platform, an update from their platform revealed that Ripple had improved the speed, lowered the cost, and reduced settlement times since first announcing the project over a year ago. And it was also mentioned that Ripple is working with more than 20 countries, including Peru, Montenegro, to roll out their respective CBDCs. And so the main key here to understand when we go back to the chart is if we see a break to the downside for XRP, then on the RSI, we would see a break to the downside as well too, below 30. And historically, anytime that a crypto asset or a stock or whatever is below 30 on the RSI, that is historically a great period to back up the truck all the way to the bank, grab the bags, pack them and stack them, leave no bags left behind, because we believe the spending power of the dollar is going down in value. That's a fact based on inflation, monetary print orders, what the Federal Reserve is doing, and blockchain technology is going up in interest. That's the truth. And together, we're all going camping on the beaches of the moon. So I will see you on the next video. I will see you on bullrunners.com, where you're going to learn our #1 way to create passive income online with crypto. As always, you know what to do. Stay bullish.